It's that time of the year again. The moment we've all been waiting for. It's tax filing season 2020. Let's go! Hey guys, what's up? And welcome back to my channel. My name is Wietse Kuilboer, and in today's video I'm going to talk about how to do your tax returns of the year 2020. When you talk about tax returns, a lot of people kind of cringe. They don't like to do it. It's a lot of work. It's difficult. But in fact, it's not that difficult. And if you know what you're doing and you know where to look for, it's kind of easy. So that's why I made this video, to help you guys do your tax returns and get the most out of it. But first, a quick disclaimer. I am not a financial advisor, and I'm simply posting about my ways of doing tax returns. And if you want professional advice, I suggest you hire a financial advisor to help you with your tax return. Without any further ado, let's go into the video. Who has to file for the tax return? Well, everyone with an income, with a salary, a business owner, people that earn money from dividends, people that got money through inheritance. If you receive a blue envelope, like the one there on the whiteboard, then you have to do it. But if you didn't receive a letter, that doesn't mean that you can't file for a tax return. It's just not mandatory. Also, if you have to pay back less than 47 euros, you don't have to file for tax returns. And how difficult it is to file for your tax returns depends on your personal situation. It's, for example, much more complicated if you are a business owner than if you have a steady job and you get a monthly salary. It also depends if you bought a house or if you're renting a house, if you are studying or not. There's many variables that make it more or less complicated. So how it works in the Netherlands is that you have two tax brackets. The first one is up to an income of 68,507 euros and it's 37.05% in taxes. And the second one is above 68,507 euros and then you pay 49.5% in taxes. Let's say you earn 70,000 euros per year. So that means that you are in the second tax bracket. Does that mean that you have to pay 49.5% over the total amount of income? No, that's not true. The first tax bracket is up to 68,507 euros. That means that you will have to pay 37.05% over that amount. And then the amount above 68,507 is when you have to pay 49.5%. In this case, that would be 1,493 euros. But calculating how much taxes you have to pay is not as easy as just multiplying your income with the tax bracket that you're in. Because there are different discounts that do apply. Like for example, if you work a job, you get a discount on a certain amount. And also if you are a business owner, there are many different things that can apply for your situation. So check it out and see what can apply for you. Most of these things, they will calculate it automatically. So don't worry about finding out how it works. Most of the time they do it for you. But maybe if you're a business owner, it can be more complicated, and then it could be smart to hire a financial advisor to help you with your tax returns. So how it goes is they look at the total amount of income that you generated, and then they look at certain type of costs. Because some costs are tax deductions, and I will go over that in a little bit, but you can subtract that certain type of cost from your income. Let's say you earned 1,000 euros and you have to pay 37.5% in taxes. That would be 370 euros and 50 cents. But let's say you have one of those costs that are tax deductible and you spend 100 euros on it. Then your income is not 1,000 but 900 euros. So then they calculate 900 euros times 37.05% and that's 333 euros and 45 cents. But let's say that you already paid the 370 euros and 50 cents. That means that you will get back the difference. And in this case, that's 37 euros and 5 cents. So if you have a lot of tax deductible costs, you can get a lot of money back. And that's a really nice thing about tax returns. But sometimes you didn't pay the amount of taxes that you had to pay, and then they will charge you the difference. Let's say you paid 300 in taxes, but you had to pay 400, then they will send you a bill for that 100 euros that you didn't pay. Another thing you have to pay taxes on is when you have a high net worth. And the rule for wealth taxes in the Netherlands in 2020 is if you have more than 30,846 euros if you are alone, or if you have more than 61,692, or double that amount if you are with a fiscal partner, you have to pay wealth taxes over the amount above that threshold. So let's say you have a net worth of 40,000. In that case, you would pay wealth taxes on the amount of 9,154 euros. But if you are together and your net worth combined is 40,000, you don't have to pay any taxes. Moving on to the next one, tax deductions. This is one of my favorites. Who doesn't love tax deductions? If you have a lot of tax deductions, that probably means that you will get money back from the government. So the first one is study cost. If you're following a study to improve yourself and not just a study as a hobby, for example, you're taking cooking lessons or things like that, it's not tax deductible. But if you do a study, let's say you are doing a bachelor in economics to get a better job, then those costs are tax deductible. However, there is a threshold of 250 euros. So that means that the first 250 euros you make in study related costs are not tax deductible, but the money above that is. And there is a limit. The maximum is 15,000 euros. Buying, selling, or owning a house. When you buy a house, there are a lot of costs involved. And some of those costs are tax deductible. All the costs that are related to getting a mortgage are tax deductible. So for example, your mortgage advisor or the notary costs. If you sell your house, also certain costs are tax deductible. So most of the time, if you buy a house, you will need a mortgage to finance it. And if you have a mortgage, the interest payments you make on that mortgage are tax deductible. But there are some conditions. One is, for example, that you live yourself in that house. So if you buy a house to rent it out to other people and you have a mortgage on that, the interest payments are not tax deductible. And in the Netherlands, you can choose to get these tax deductions monthly or once per year. And if you choose to do it once per year, when you're doing your tax returns, you can get a big amount of money back. So that's a nice bonus. Another one is gifts or donations. If you donate a lot of money, you can also subtract this from your taxable income. Also here there are some conditions, and like I said, I will leave a link in the description that will go over all these different conditions. Then the next one is medical costs. And most of the time medical costs are covered by your insurance. But if this is not the case, those costs sometimes are tax deductible. But of course, first you always have to pay your own risk, and that costs are not tax deductible. And it's not that all medical costs that are not covered are tax deductible. They have to serve a purpose. Let's say you don't hear so well and you need a machine in your ear, but you want the most expensive one because it looks nice. Then they say, okay, that is extra spending. So then you only can deduct what they set for that category as a normal price. If you inherited money from a close one, you have to pay taxes over that amount. But you can deduct some of the costs that you had for the memorial or for the flowers, or maybe you put an ad in the papers. Those kind of costs you can take off the amount that you got, and you only have to pay taxes over the amount that's left over. So now I will show my screen to show you guys how to do your actual tax returns. I suggest you go to Google and then you type in Belastingaangifte 2020, press enter, and then you can see, at least in Chrome, it gives you the option to translate it. So if you're Dutch, obviously keep it in Dutch, but if you are non-Dutch speaking, I suggest you put it in English. And then if you click here on tax return, you get the home screen of our tax authority. And then here you can log in. Let's click and you choose My Tax Authorities. It takes you to this screen, and what you do here is you log in. And it's kind of funny because this always happens that in the first few days there's a lot of people that want to do their tax returns just to get it over with. So right now it says temporarily unavailable because the maximum amount of people is logged in. So if you really want to do it the first few days, make sure you do it on times that not a lot of people are doing this. So yeah, this can happen sometimes, like I said, especially in the beginning. Don't worry about it. You have until 1st of May to do it. Obviously you rather do it before the 1st of April, because then you will know before the 1st of July if you will get taxes back or if you have to pay. Let's go back to Belastingdienst.nl, and here you can also find a lot of information on how to do your tax returns. So if we go to the Declaration 2020 and you go here to Instruction, you see the 4 steps on how to do your tax returns. The first step I just showed you, log in on tax authorities, and you do this with your DGIG, your digital ID. So it's really important that you have that information, otherwise you cannot log in, you cannot do it. It says prepare. Make sure you have the correct information and documents what information is necessary to have. Your BSN, DGIG, annual statements from salary or income, partner alimony if you had that. And then they especially are interested in what was your balance at the 1st of January. So at the 1st of January of 2020, what was your balance? Because like I said earlier, if you have more than 30,846 euros if you are alone, or double that amount if you have a fiscal partner, you have to pay wealth taxes. So then we go to living. It talks about the WOZ value, or WOZ-waarde in Dutch. And what this means is that there is a certain value that they say your house is worth. This value is stated on the WOZ assessment you received from the municipality last year. So where you live, they assess the approximate value of your house, and they use that to assess how much property taxes you have to pay, but also there are some other taxes involved. Then annual statement of your mortgage. Like I said earlier, your mortgage interest payments are tax deductible. So you need to know how much did you pay in interest for the whole year. And when buying or selling your home, the notary bill. So you can deduct those costs as well. Other deductions are gifts, like I said, healthcare costs that you have not been reimbursed for. And like I said, you cannot deduct the personal contribution, paid partner alimony for people who are divorced but still have to pay their ex-husband or ex-wife. And this is important as well. If you were not entitled to student finance, your study costs are also deductible, like I said. Then others are data on loans or other debts, paid annuity premiums, an overview of paid disability insurance. Obviously this doesn't apply for everyone, but if it applies for you, make sure you have all this data. And then you have dividend data. It's important for us investors. So step 2, open the declaration. After you gathered all your information and all your data and you have been able to log in on the website, you click on income tax and then you go to the year 2020. Step 3 is checked. Like I said, most of the information is already filled in for you, so just make sure that it's correct. And also some things they won't be able to fill in for you, so make sure that everything that applies to you is filled in and you make the most out of your tax return. And you don't have to do this in one go. Like it says here, do you want a break, short break or long break? Doesn't really matter. Just make sure you save it and you can pick it up later if you want to. And then step 4, sign. When you have completed the tax return, you gotta sign, and when you sign, it basically means that all the information that you provided is honest, it's the truth. Because if they find out later that you lied about things just to get more taxes back, you will have to pay those taxes back, but also you will get a big penalty. So just be honest, don't lie about it, because they will get to you, and once they get to you, you will have to pay a big penalty and you're not going to be happy. Then it just says file a declaration together. If you have a tax partner or a fiscal partner, you can do it together. It not only saves time, but also you can distribute the income and the cost between the two of you, and you can decide how you distribute it, so it's the most favorable for you. And also, if you need help, ask a family member or an acquaintance. And there's also a lot of information online. You have, of course, this video. If you really want professional help, I advise to just hire a financial advisor. But most of the time, I don't think it's necessary, because like I said, most of the information is filled in already. If you just have a normal job, you have a house, you didn't do anything weird, it's rather easy. So I would save that money and do it myself. But if it's really difficult for you and you really want to have someone professional do it, just ask for that. And I don't have that much time, but I do have some time to help some people. So if you want my help, maybe we can figure something out. So yeah guys, that was my video on how to do your tax returns for the year 2020. I hope it was useful. Please let me know in the comments down below. And also, if you like this video, please don't forget to smash that like button. It would really help me out a lot. I put a lot of time and effort in these videos to help you guys, so I would really appreciate it. And if you want to see more of this type of content, please don't forget to subscribe and hit that notification bell. Thanks for watching. I hope I see you in the next one. Have a great day.